Excellent. Okay, brilliant. So obviously still pretty volatile markets depending on the ones that you follow. A lot of uncertainty in the market after that downturn in equities a couple of weeks ago, and we've seen some decent moves in the oil market, some quite a decent amount of flux in the US dollar, trying to find a base, but not quite doing it just yet. So interesting market conditions. I trust you've read the risk warning at this stage. I'll skip right through to the trading platform. Usual format. Going to go through the major trading products at LCG, but any other questions on any other topics, please just let me know in the questions box, and I'll get to them as soon as I can. So starting off with this weekly chart, so you can see here from the candlesticks that this is quite unusual actually to see these two long leg, not quite dojis, but spinning tops. So the information that we're getting from this weekly chart, just in the short term here, is indecision and quite volatile trading conditions where we're rocketing up to the highs, rocketing down to lows, and then just finishing again in the middle with the market just unsure which direction to take, and that's happened 2 weeks in a row. You can kind of see the trading range there. We'll look at that on the lower time frames, but you can see that this is basically the level that got broken. It was proved to be a false break in the meantime, rallied up to these highs, and now we're back down here again. So generally you can sort of see that top of the range on a slightly broader horizon, top of the range, middle of the range where the market's sitting at the moment, and bottom of the range. It's tested the top of the range a few times, only had that one false break, if you like, through the 1500 level once. So maybe we do need another probe down to 113 in order to shore up the market and really test that level. But it's it's not altogether clear at the moment. One thing you can just say is the alignment of the market of the moving averages is fairly bearish, and we've had the break of this support, although it got kind of nullified. Still, you could say, well, beneath these peaks here, this little rally up here, well, caught a few people off guard maybe after this break lower. Still, maybe with the impetus is slightly to the downside. Doesn't quite look like a bottoming pattern just yet. But if we drop down to the daily chart, you can see that we're in a kind of bearish alignment here on the daily chart too. The 20-day moving average below the 50. We're making lower lows and lower highs. Obviously, we've struggled a little bit down at the sort of the 114.80s at these lows down here, but this is our big weekly level that we determined from that weekly time frame, and we're reversing off this middle part of the longer term trading range as of today. So this looks pretty bearish as it stands, but it's difficult to take too much reading from it. I think you have to pick your direction and take the signals in that direction. But obviously, we had a kind of decent bullish engulfing off these series of lows, but now we're reversing lower from it. So I think both these timeframes combined, it looks bearish, but there's no real clear signal here. So similar to last week where I said there's that been big uncertain week, well, the conclusion is the same this week. Another almost perfectly matching uncertain week. So it's a little bit difficult for determining the trend, which is largely what I try and do in these webinars. Similar, so that's why I said volatile conditionings for the dollar, because you can kind of see that although it's been a slightly more bearish tone to the pound, pretty much a similar sort of deal with the highs from last week, just marginally lower than the week before. Same in terms of the lows, and actually looking back past 6 weeks, it's been a real chop with just selling off at the highs, buying back at the lows, not quite sure which way to take it. The only thing you can kind of say is that, well, the moving averages are kind of bearish, but as long as this carries on, the moving average is going to kind of flatten out. Obviously, it's a lagging signal. It just sort of tells you the general impetus the market's still should overall be bearish. But as we mentioned before, what we're kind of looking for is another little leg down towards this low here before a rally higher. And I think that the fact that we haven't been able to make the progress higher so far around that one beyond the 133 makes sense in terms of that general idea. Haven't quite got the bullish power at the moment, hence these reversals. But there is still some buying interest in the market. Probably we need lower prices to attract a bit more buying interest and flush out these the sellers that are up here. So I know I haven't dropped down to the lower time frame, but it looks quite. I will do so quickly. It looks similar to the euro, where it looks like it should be about to break lower, but it's difficult to kind of take too much from these signals. Reversed from a inside day, I believe that's a Sunday, so maybe not too much interest to be taken from that, but reversing from these two moving averages, if we can take it through below this rising trend line, depending on how you want to do it, through the recent lows or previous lows, etc. A flush through these lows here should be a break of the trend line and the lows, and confirm from a move lower at the moving averages, based on a sort of longer term weak bearish looking outlook. Maybe we're going to get that leg lower that we're looking for here. So I think generally eyeing that next leg lower. If we don't get it, then maybe actually we can finally break through these peaks. That's the kind of if-then scenario we're looking at. This is dollar yen. So actually we mentioned last week this was quite a decent little setup off of firstly this high didn't quite work, but then we moved down to these series of highs through here. So we had the highs that were broken, retested, rallied right up to the 114.50, and then pulled back to those highs again and got a little bounce off it. So this little bounce has worked out quite well. And just like the pound and the euro look generally bearish, we still think that actually dollar yen can be positive. This breakout of this rising trend line can still push higher, even though that looked quite soft. It's just because it was such a solid resistance, we think. But the rally, obviously after that big bearish week, it hasn't been the most explosive rally off that support, but I think we can start edging up from here. So this is the FTSE 100. So we had the break through the rising trend line, but we're still in the kind of these choppy conditions. So this is kind of what we want to see for if we are remaining bearish the market based on this broken rising trend line on this weekly chart and sort of somewhat double top pattern around the 700-800. If we are a bit bearish on equities still, we're getting the bounce that we need to be able to sell at a better risk reward somewhere around those two, that broken low and this broken rising trend line. That's kind of what something in this area around the sort of 7,200s obviously offers a lot better. You're selling into the bounce rather than selling the momentum lower in a very choppy, volatile market. General FYI on volatile markets, I think it's even more advisable to try and buy the lows and sell the highs, because the trends are a lot more volatile, so there's a lot more movement. And they reverse quickly, so you think you're catching a breakout and it just bursts the other way. Okay, here's the Germany 30. So we're actually on the lower time frame there. It's back to this idea of the head and shoulders pattern. We have closed lower. We're moving up to kind of retest the neckline now. We have retested the neckline somewhat up here. We're getting a little rally up to the second layer of it. So actually we're at quite important levels here. This kind of culmination of the two previous supports turn into resistance. This box area basically needs to hold for this head and shoulders to actually still have some weight. So obviously in general, we've had the big sell-off. People are still in dip buying mode. So it's not immediately, there's there isn't the kind of general explanation out there to immediately sell off. But obviously, I think what generally drives a bigger pullback in the market is not short sellers or anything like that. It's that the drying just buys up after the initial drop. People lose confidence and they stop actually buying that dip. And it takes like the longer term value buyers at lower prices to stabilize the market. So but so it's that those are the two competing forces right now. There's dip buyers who have been successful for the last couple of years of buying every little pullback versus that potential force which is out there of just confidence drying up after that decline and not as much buying interest anymore. So this is Wall Street, obviously the Dow. We haven't made any headway. This is the daily chart since that big rally out of the blocks, and we pulled back again, obviously. But excuse me, did pull the headphones away. I'm not sure if you're able to hear the sneeze there. This Fibonacci, if you remember, was basically drawn off that 2-day decline. So we basically ended up around the sort of 50 to 61.8% pullback area, drop back from there. And then you can see on the shorter term charts that basically this was the little consolidation before we rallied out the blocks. And we basically just kind of pulled back to, it's obviously it was more of a sloping level. But basically kind of where we actually saw that first bit of breakout positive momentum through these little bits of highs here, that's basically where we found the support, which stands to reason. And now we're attempting a similar sort of little triangular base break again. So this was kind of the break on this occasion, break, pullback, rally. And we're looking for a sort of similar thing here with the moving average is actually working pretty well in itself. So we're attempting another little gradual base building operation here with a little bullish push off the lows. Obviously, the two competing fundamental stories is in terms of the US is the general sort of trade war, rising bond yield jitters versus earnings seasons looking pretty good. Lots of US earnings out this week, by the by. So if we do see the likes of Apple, Google, and Amazon, some of these huge companies, if they do beat expectations, obviously that can do a lot to allay the fears that we're in some beginnings of some bigger bear market situation. This is gold, so obviously we had that breakout, but as we'd sort of been alluding to along, we haven't quite got to that 1235 or whatever you want to call it kind of level yet. But basically this old low around here, probably 36, is a bit closer, but we've got close to it and we've kind of drifted off a bit. Obviously it makes sense that gold rallied as a haven, so now that markets are trying to base out a bit, obviously gold's falling away. It's into that previous low, and it's obviously the 20-week moving average as well. If we drop down to the daily chart, obviously the alignment of the moving averages has shifted to the positive side on the daily chart. So you would still, if you're trading off this daily trend, you're hoping that there's going to be a little dip as we hit that longer term resistance, but it's only temporary before we rally out the blocks again. So I think still inclined to trade with this breakout. If we've broken out, consolidate a bit, drop down towards the breakout area. I always had it as this sloped area, but if you just draw off that first low, or maybe just a kind of mid of these highs, it's a little bit lower from here. We haven't quite got to it yet. So maybe if we're lucky, a little dot down to 12, something like that. Slightly better risk to reward. Looking for that, for then the prices to rally out the blocks again and break out above 1235. Back through this level, we kind of know that the breakout's losing its momentum. and the longer term trend is lower, obviously. So then we need to reconsider our position. So 12.12, 12.10 being the round number, 12.12 being the kind of the intraday highs. That's the kind of zone to look out for here. Either our buy zone or our kind of give up zone if it breaks lower. And last but not least, we've got Brent crude oil. I think this is probably the fib I was drawing last time. Where do we stand from it? Well, I think I was probably just saying that this 50% pullback is a sort of potential end of this big rally that we've had, but pretty much we've been trying to base out around that 50% pullback for a while, but haven't quite done it yet. So this obviously an area of interest. It's the 50% pullback. It's sort of these two highs over here. It's this most recent low here. We have marginally closed below on our timing. Not quite sure how that bears up on the futures market. But obviously, if we're bullish here, what we want to see is this correction breaking to the top side. So however you define your pullbacks ending, I don't think there's a particularly tidy trend line to look at here. You can maybe just use the last two peaks. Not particularly tidy that. I don't think I'd rely on that trend line especially, but maybe a break up through these shorter term moving averages, taking out some of these highs. I mean, this low at around 79. Yes, we had that little push lower, but we got a bullish engulfing candlestick the very next 4 hour period, and then we've stabilized above that 79 level, you notice, on intraday basis for a few periods, rallied up, obviously selling interest. That's probably about 50% of that decline. And obviously rather than obviously the savvy trading technique on the short term, rather than trying to pick the bottom here, 61.8% retracement of that drop. Nice little trade down into the previous lows again, which have still held. So I think, my bias is that we can actually turn things around here, because we basically haven't had a significant breakthrough 79 yet. It looks like a false breakout to me here. But I sort of know where to define my being wrong. If we do get another push below 79, I think we continue down to 77s and below. So I'm going to call it a day around there. We've hit around the 20-minute mark. Hope that was useful info. Any questions at all, obviously, send it through to customer services, and if there's any direct questions for me, obviously I can answer via any comments on YouTube, or I can answer via your questions to the customer services. They'll pass on to me. But thanks everyone. Good luck with trading for the rest of the week. Just signing out.